We need to talk about an emergency rate cut. I still see and hear and get asked about the chances of an intermeeting rate cut. A lot of this likely because of Jeremy Siegel's call for an immediate 75 basis point cut. So let's talk about this logically and what I think might happen. So the first thing to talk about is when you are asking for a rate cut, I would ask you to think about why do you think a rate cut is needed? I think there's generally two reasons to ask for or beg for a rate cut. The first one is obviously tied to what's going on with the Bank of Japan. The Bank of Japan surprised the market and raised rates, which caused a lot of selling pressure, liquidation. There are estimates that somewhere between 50% and 75% of the carry trade is unwound. I don't know how accurate that is, but that are the estimates I read this morning. What most people don't realize is if the United States were to cut even by 25 basis points, let alone 75 basis points, it would actually make the carry trade worse. Likely much worse. Because again, you got to remember the carry trade has two elements. One is the spread or delta of interest rates. For example, let's say Bank of Japan is 0 and the United States is 5. If the Bank of Japan raises their rate from 0 to 0.5 and the United States goes from 5 to 4, that compression is a problem. Where this gets unwieldy is not only do you have a delta on rates or spread, but then you have this lottery ticket called currency. I haven't checked decades, but I'm going to assume decades, the Japanese yen has been getting weaker against the US dollar. That means not only do you get the spread, but you get the currency delta as well. Well, if Bank of Japan raises their rate, the US lowers their rate, the dollar will weaken. And suddenly this lottery ticket that you held becomes a problem. And in the currency market, the amount of leverage is insane. So a very small move in the Japanese yen like we saw last week, what was it? 142 to 146 is enough to wipe out all gains and could, frankly, destroy a hedge fund. So that's the first one. If you are asking for significant rate cuts because you think it will help the carry trade, you are wrong. So the second element is, hey, Zuber, you've been calling for a recession. You actually think we're in one. Have you not looked at the consumer? The economy is falling off a cliff. The Fed needs to come in and do something immediately. That is a legitimate concern. However, I would argue, again, you have to be careful what you wish for. Again, if you were to see the Fed come intermeeting with an emergency rate cut, that would likely send a very scary, talk track to the market, and you likely would not like the outcome. If you're interested in saving the stock market, an emergency rate cut, at least in the short term, in my opinion, would not help. It would actually be worse. So again, I do not see an emergency rate cut coming. I never have, but there is quite a lot of talk of it. And all I would ask is be careful what you wish for, because on either side, I think people would be surprised by the outcome. Well, let's talk about the jobs number. We got another jobs number once a week. Every Thursday morning, we get the weekly unemployment claims. Now, the weekly unemployment claims are kind of our drumbeat. And to take you back to where we've been, we have been concerned about the upward trajectory of the weekly unemployment claims. So much so that last week came in at a cycle high of 249,000. I think it's been upwardly revised to 250,000. We were concerned, I was concerned, that those stair steps would continue to go higher. Well, it looks like they have reversed. Again, that's good news, right? It looks like the initial weekly claims came in at 233. Expectations were 240. Again, last was 250. So again, initial claims came back in at 233. Why is that important? That's right kind of where we've been for the better part of 6 months. 225, 230, somewhere in that range. What may have happened, we'll know more next week, right? Next week's another attempt at the weekly numbers, is there was some weather, hurricane in Texas, that may have caused some distortion in the weekly unemployment claims. But again, we won't know until next week. That's why we got to watch the weekly claims. The weekly claims is an indicator on what will be our outcome on our monthly surveys from either ADP or Bureau Labor Statistics. So again, this morning, no doubt, the number is better than expected. I suspect the market liked that. I should have checked the 10-year. Let's see if I can pull the 10-year up on my phone here. I'm going to guess the 10-year's up. The 10-year might actually be above 4%. Let's take a look. Up close, 3.998 as of right now. So again, the 10-year note I think was down, what was it, like 3.6 or something? Now it's back to 4%. Mortgage rates had that real big dip to 6.3. They're probably at 6.6 now. I guess the question I have for you, what do you think? September rate cut or not? Lots of people were calling for September rate cuts. Many people calling for a 50 basis point cut. But there's a lot of data between today and September. And you know what, folks? The chance is not zero that we get no rate cut in September. So lots of data coming. How about Jamie Dimon? Jamie Dimon, CEO, president, the grand poobah at JP Morgan, still thinks there's a chance of still thinks there's a recession on the horizon. It should be noted that Jamie Dimon in 2022, so basically 2 years ago, said there was a hurricane coming, which obviously at least hasn't shown up yet. He believes the chances of a soft landing are somewhere between 35 and 40%. And we are not in a recession as of right now. We got some interesting earnings. Zillow beat top line, bottom line. Looks like Zillow's CEO is out. Somebody else has been reported. I think it was promoted, the COO. Looks like Zillow is looking to become the super app for real estate. Selling, renting, leasing, all of those things. It looks like Zillow has left that terrible idea of flipping homes, iBuyers behind, and they're going to try to become the super app of real estate. Robinhood beat top line, bottom line. Trading volume was up 20% in July. July is not part of their Q2 earnings. July was just a very heavy trading month, and they're basically saying, hey, the start to Q3 was pretty good. We got some other earnings. We got Under Armour. They did beat top line and bottom line, although sales in North America fell 14%. Eli Lilly beat top, bottom line, and raised the classic triple beat. They have an unbelievable demand for some weight loss drugs. Folks, makes total sense, right? What do we like? The easy button. We don't want to, run and eat better. We'd rather take a pill. We want an easy button. So yes, Eli Lilly, you got a weight loss drug that's working. Guess what? You're going to sell a lot of those. How about Bumble? Bumble missed revenue and had weak guidance. Stock's down big this morning. Yes, folks, not swiping left or right. It looks like Bumble was down. Dutch Bros, a competitor to Starbucks, did beat and raise, although they did slow their store openings. Right? They slowed how many stores they will be opening, at least in the next quarter. So other things going on. I want to let you know about 2 fun videos today I want you to check out. Yesterday, I interviewed 2 family friends, their son and daughter. Wanted to figure out what a 16-year-old and a 14-year-old knew about money. So we asked them 10 questions about money. Let me know what you think. I believe Grant's video comes out at 11 and Sky's video comes out at 1. So you have an opportunity, and something that might be fun is, how did you answer those questions? Do you understand money better than a 14 or 16-year-old? I think those will be a lot of fun. They're only 4 minutes long. So let us know how Grant and Sky did. Let me know how you did. Leave the comments below. How about Claudia Psalm? We have been talking about the Psalm rule for quite a while. Looks like Claudia Psalm has done a lot of writing on X or Twitter, basically saying this time is different. She is saying her rule, which historically has been 100% accurate, is wrong. A recession is not in the offing. Why does she say that? Well, when you break down the Psalm rule, this is my interpretation of what she said. The Psalm rule is about rate of change for demand. What the Psalm rule does not look at is rate of change of supply. And Claudia Psalm is basically saying at least half of the rate of change in the Psalm rule has not been about loss of demand. It has been about an increase of supply. Now, how could that be? Well, unless you've been living under a bridge, we have had a lot of, let's call it migration to the United States. And that migration has created more supply, and that additional supply has distorted the Psalm rule. So again, I guess it logically makes sense because, again, when you look at the Psalm rule, it is very much rate of change demand, and it has zero influence about supply. Historically, supply has not been distorted, changed so drastically. So it would make sense that maybe, just maybe, the Psalm rule is wrong this time. This time is truly different. But hey, well, let's see. Don't forget, if you are part of our school community, you had a 2-hour accountability group call yesterday with Frank. Talked with a QA with a lender. You talked what is a rate buy down, HELOCs. Talked about the difficulty of getting insurance, causing condo financing to be difficult. Again, folks, we put out 2 accountability groups inside of school. You can come, introduce yourself, ask questions. One on Wednesday, one on Sunday. We also give you access to Millionaire Conversations. This week, you got to talk to Anna Kelly. Again, lots of free education. Come and join the group. If you join the group, do me a favor. Introduce yourself. We have over 210 members now. Introduce yourself. You'll make new friends. You'll ask questions. Interact. The community is starting to really build momentum. So you need to be a part of it. Come join, come learn, come get inspired. It is the place to be. Two last things as we wrap up today's daily financial news. David Rosenberg is out really trying to highlight that the Fed is behind the curve. He says that based on the Fed statements, they are at least 125 basis points, 5 rate cuts, up to 250 basis points, or what would that be? 10 rate cuts behind the curve. This again is David's attempt at trying to get at what's called R star or terminal rate. He thinks the Fed is getting increasingly restrictive as inflation falls. So again, David is saying, get off the stick, start cut. And then finally, Warren Buffett. Warren Buffett, as we talked about earlier in the week, has sold 50% or roughly 50% of his Apple stock, drastically raising his cash balance. Memory serves, it was $277 billion. Yes, folks, that's a lot of cash. Turns out that good old Warren Buffett actually owns more T-bills than the Federal Reserve. So a lot of people ask where to put the cash. Well, Uncle Warren says T-bills. So, when in doubt, follow Uncle Warren. Again, folks, like, subscribe, comment. Do me a favor, folks. Let me know what you think of Grant and Sky's answers. Again, a 16 and a 14-year-olds. What do they know about money? What did they say about college? What did they say about Bitcoin? It is all there for you. Don't forget to join school. Don't forget to buy your tickets for our Vegas event. They are selling fast. Take care. Later.